Otherwise, we only discuss about the theoretical part. Income from leasehold property. So this all comes under the income from other sources like cash credit. When we discuss the previous year, exception to the rule of previous year. Why? Because actually that is a basic concept where we discuss that previous year means the year in which the income has earned. And whatever the income has earned, the assessee will be paying that amount in the assessment year, the tax amount. Whatever income earned in the previous year, that amount, for that amount, they will pay the tax in the assessment year. But previous year means last 12 months. And assessment year means after the 12 months, in whichever year we are paying, that is assessment year. So here, if you, yes? Did anyone said anything? Okay. So here, income from undisclosed sources means whenever we were talking about previous year, exceptions to the rule of previous year. So there are certain cases where previous year is not the year where we earned. Whenever it has been found that you have some amount where you do not have the proper justification or you do not have proper proof for that, in that case, the year whenever it is found, that is only termed as previous year, and that year only they will pay the tax immediately. So these are all unexplained money, unexplained expenditure, means which do not have any proof. Casual income. This all comes under the income from other sources. So here we have the other thing, the main most important thing where we will be doing the problems related to this. That is interest on securities. So security means it's like any debt. It may be like debenture, or it's any loan, or it may be any paper or any bond or any security or certificate in whatever we have invested in that. On that, we get the interest. For that interest, how do we treat it? Because it falls under income from other sources. So again, here we have type securities. We have three types. That is securities exempt from tax, tax-free securities, and less tax securities. Then just look at this. Securities which are exempt from tax means if you directly invest in this type of securities, they are directly exempt from tax. There is no need to pay any tax on these securities. And we have tax-free securities where again it is subdivided into government and commercial, and less tax securities also again we have commercial and securities. So these are the, if you receive or if you invest in any of these securities, they are totally exempt from tax. And under this, if you can just look at here, 12 years national saving annuity certificates, national defense bonds, special bearer bonds, treasury savings deposit certificates, post office cash certificates, national plan. So these all are the, if you invest in this, there is tax and there is no need to pay any tax. They are exempt from tax. So these are tax-free securities. Here tax-free means it does not mean that they are not free from tax. But tax is paid by the authority or on behalf of security holder. It does not mean you are not paying tax. Tax is paid, but it is paid by the authority. So whenever it is paid by the authority, we will be doing grossing. Why? Because we receive the net interest, but whenever we have to pay the tax, it will be on the gross up value only. So how do we do grossing up? Net interest into 100 by 100 minus rate we calculated. So again, tax-free securities, we have tax-free government securities as well as commercial securities. And presently, we don't have any government securities in existence. Even if these are issued, then no tax is deducted at source. Hence, grossing up does not arise at all. So this is how just now we discussed the formula above 100 by 100 minus rate of tax. If you just look at here, net interest into 100 by 100 minus rate. If a rate is 10%, then it will become 90. So you can just look, we can understand this concept with the with the help of this example. Mr. Rex invested rupees 1 lakh in 8% tax-free debentures of a company. What will be this his taxable interest for the previous year? So what is the value? 1 lakh in 8% tax-free debentures. So the debentures rate is 8% tax-free debentures. And if securities are listed in the stock exchange, and if securities are unlisted in the stock exchange, means if there's listed in the stock exchange, their value will be different, and unlisted will be having different. Just look at you. Net interest is equal to face value of investment. Face value is 1 lakh. Rate is 8%. So net interest is 8,000. See, now this has to be grossed. Why? Because you can just look at here. If securities are listed in the stock exchange, just look at here. In case of listed tax-free commercial securities, we will be doing grossing up. Net interest is 8,000. The amount we got here. So this is the amount we have got 8,000. This is the interest. So the formula is gross interest is equal to net interest into 100 by 100 minus rate. Now here 8,000 into 100 by 90 grossing up. So we get this value 8,880. In case of unlisted commercial securities also, it will be same as usual, whatever it mentioned here. Now that is for tax-free securities, that to commercial. Next is less tax securities. See whether it is less tax securities or tax-free securities. Grossing up will be done for the commercial, for both commercial securities. For tax-free securities, we take only commercial, whereas less tax securities, we take both government and commercial securities. Grossing up will be done. So you can just look at this table. Under tax-free securities, actually exemplary securities are not taxable. And under tax-free securities, when face value is given, whatever the amount is given, we'll take it as it is. And if it is net interest is given, we will do the gross interest. Whereas commercial securities, whether it is listed or unlisted or whatever it is, we do the grossing up will be done. And whatever income derived from the letting, family pension, this all comes under the income from other sources, winning from lotteries, puzzles. So whenever you have the like crossword puzzles, lotteries, horse races, card games, they are directly chargeable at the rate of 30%. We'll do one problem. We'll look at the one problem so that you'll understand. We just look at here. Mr. Bhargava holds the following securities on 1st April 2018, in which 80,000 7% securities of Gujarat government, date of payment of interest December 15, and 90,000 9% securities of MP government, date of interest March 31st, and 85,000 6% debentures of ABC Limited, date of interest is July 15. Now, on August 3rd, 2018, he sells rupees 30,000 6% debentures of ABC Limited and invests the sale proceeds in listed debentures of PQR Limited. During the previous year, 2018-19, he receives 5,400 net as interest on debentures on listed debentures of PQR Limited. Calculate the total taxable income of Mr. Bhargava for the estimate. That is wrong. Actually, we'll rectify that year. Not a big issue. Assuming that is income from salary is 1 lakh after deduction under section 16 and collection charges are rupees 2,000. So now it is total income we have to calculate. We just look at here. Is asking to calculate total income. To calculate the taxable income, we have to find out. What is the income on which taxes he has to pay? So first what we will do, we have three types of securities. One is 80,000 7% securities of Gujarat government and 90,000 9% securities of MP government and 85,000 6% debentures of ABC Limited. So it is very clear if you just look at here. Here it mentioned government securities. For government securities, it will be directly, we take it is gross value only. So 80,000 into 7%. 80,000 into 7%. It comes to 5,600. So what we will do, we draw a table. We write the heading. Computation of income from other sources of Bhargava, and we draw for the assessment year 23-24, we draw a statement like this. Particulars amount in rupees. So first what I'll do the securities part, because the main important thing in this not the salary, but we will first look at what is the other income he's having from other sources. So first is having Gujarat government securities. So I'll write 7% Gujarat government securities. That is 80,000 7%. So 80,000 in the brackets, 80,000 into 7%. It comes to 5,600. It comes to 5,600. So first one is Gujarat securities, 5,600. Next one. Again, the next one is also government securities only. Government security means it's a face value. They have given directly the gross value itself. There will be no grossing up. So what I'll do again, MP government securities, 90,000 into 9%. So 90,000 into 9%, it comes to 8,100. Next, 85,000 6% debentures of ABC Limited. So here, what we'll do, 85,000 6% debentures of ABC Limited. So just let's calculate 85,000 into 6%. So it comes to 5,100. It comes to, first we'll take for that 85,000 into 5,100. ABC Limited. Now, what is he doing? on August 3rd, 2018, sells 30,000 6% debentures of ABC Limited and invest the sale proceeds in listed debentures of PQR Limited. So what he's doing, he sold 30,000 worth of debentures and again he is reinvesting. Reinvesting where again in PQR Limited. During the previous year, that is not because we need only income. Here we are not getting any income. Why? Because he's again reinvesting. We do not have any income. Whatever we receive, he again reinvesting. So that is not an income to us. But what is telling, look at here, during the previous year, 2018-19, he receives 5,400. You can just look at here in the brackets, he mentioned net 5,400 net as interest on listed. It means it is not a gross value. Whenever we are calculating income from other sources, it should be gross value. What is telling? It is a net income, net interest. So what we will write? We'll write like this. Net interest from PQR Limited. From PQR Limited. How much we are receiving? 5,400. But this is not the gross value. This is only the net value. So net interest into 100 by 90 for grossing up we take. So it comes to 0. How much it comes? 5,400 into 100 by 90. Comes to 6,000. Just find out again. Possibility 6,000. So add all this. So we have 5,600 from Gujarat, 8,100 from Maharashtra, and ABC 5,100, and from PQR Limited 6,000. When you add all this together, we get 24,800. This is gross interest. This is gross interest. Now from this gross interest, 24,800, do we have any expenses? Just look at here. Look at here. We have collection charges rupees 2,000. So from gross interest, we deduct this. So deductions under section 54. Sorry, 57. Not 54. 54 is income from capital gains. So deductions under section 57, collection charges rupees 2,000. It comes to 22,800. This is income from other sources. This is income from other sources. But look at here in the question, what is telling us? He has given us even income from salary also. He has also given income from salary. So income from other sources we got is 22,800. And income from salary is 1 lakh. So what is the total income we have? We have 1,22,800. This is our gross total on which we will pay the tax. This is a taxable income, 1,22,800. So this is all about the income from other sources. Now we move to the next part. Aggregation of total income. Aggregation of total income. So if you just look at here,
So here aggregation means when total all incomes putting together and we take it as total income. So here we have, as we were having five sources of income, aggregation means we bring all incomes together. And for example, apart from the income from salary and horse property, if we are having any business income, so in that case, if you have any income from loss from business, in that case, in that case, we what we will do, how to write off that, how to carry forward that losses and forward that losses, that will be try to understand, and mostly this will be given for the theoretical part also. So income of other persons included in the assessment's total income means others person income including in the total income. What are the chances and when it will be added to that particular person's income? So here, if you look at it, transfer of income without transfer of assets shall be deemed to be the income of transferor. And here, revocable transfer of assets also takes place. Sometimes, if you're transferring to your minor child or transferring to your spouse, do we charge any income from them? No, we don't charge. Just we transfer our house property to our spouse or our children or our married daughter. So, what are the cases? How to whether it should be treated as a assessee's income or spouse income? So, for that case, we have some points. That is, whenever you're transferring any asset to your spouse, or whether your income of your spouse should be added to your total income. Suppose both wife and husband both are earning the income, but one person is having below the taxable limit, the other person is having more the taxable limit. So can it be write off or not? So there are certain incomes of the spouse where individual shall be included in the total income of an individual. What are those situations? Under that, the first situation is income of spouse by way of salary, commission, fees, or any other form of remuneration from a concern in which such individual has substantial interest. Means, for example, I am one of the member or I am the one of the board of director member of some organization where even my spouse is also working in the same organization and they are receiving salary and all those things. In that case, that all will be included in my income itself. Substantial interest means at least I should have 20% of voting power in that organization. And income of daughter-in-law means if any individual I have transferred some assets to my son or my daughter-in-law, that is my son's wife, and from that property or from that house, if any income is arised or any income is arised from the transfer of such assets, that also will be included in the my income only. Why? Because I given maybe out of any situation, but if they are earning any income out of that, that will be added in my total income. And transfer of assets to other person or association of person for the benefit of spouse means without taking any amount or collecting any amount, if you're transferring any asset and whatever the income that has been earned from the transfer of that particular asset will be included in the assessee's income only. And income from assets transferred to a person or association of persons for the benefit of his son's wife. So for the benefit of son's wife, if you are transferring any or transferring to any person or any association of person, if you're transferring any assets, and if any income is earned out of that asset, that will be added to the transferor, means the assessee's income only. And income from business. If the individual transfers any assets directly or indirectly to the spouse or son's wife, such assets are invested by the transferee. In that case, whatever the interest or the income earned from that, that is also included in the transferor total income only. And income of a minor child. The income of minor child also will be included in the income of his or her parent income, whether it may be mother or father. And if the child is physically or mentally handicapped and minor child, in that case, that income will not be added. In the, any of the parents, it will not be added. Only if they're good and they're earning, in that case, it will be added. Cross transfers or transfer of separate individual property or self-acquired property to Hindu undivided family, of which is a member, or conversion of property. If you're part of that and you're transferring any property and the other person may be yielding any income out of that, that will be included in the total income. Next, aggregation. So what all incomes will be added? Okay. That is share of member of an association of AOP or BOI. AOP means association of persons or BOI means body of individuals. Cash credits, unexplained investments, unexplained money, amount of investments which are not disclosed means we do not have any proof. We see in many of the newspapers, some riots are taking place. Means that happens only because when there are not proper proofs are not available. Proofs are available, it's fine, nothing will happen. The flat tax rate has to be paid. Unexplained expenditure means a person is having receiving 20,000 salary, but spending of 1 lakh to 2 lakh of amount. So that is an unexplained expenditure from where you got those income. Next, amount borrowed or repaid on hundi. So that's what they explained again here. If you want, you can just look at here. Income of Mr. and Mrs. X for the previous year is as follows. Salary from Himalayas Limited after standard deduction. Mr. X is working in that. Mrs. X is not working. Capital gain means he also invest in some of the shares. So after selling the shares, he got some amount. So he's having income from salary, he's having income from capital gain, and also he's having income from other sources. You can just look at here. He's also having income from other sources. So he's having three heads. Income from salary, income from capital gain, income from other sources. Under income from other sources, if you just look at here, is having bank interest is one of the income from other source, and other one is interest on government security. Interest on government security. But here, look at here, Mrs. X is not working anywhere. So she do not have any salary income. And also she do not invest in anywhere. So she do not even have any capital gain. Only she's having is income from other, that is bank interest and interest on government security. Now, Mr. X has no qualification or experience and is employed in Himalayas Limited. Mrs. X holds, see, Mr. X do not have any qualification and neither he has experience, but still he is working. Where he is working in Himalayas Limited? Why? Because let us see here. Mrs. X holds 22% equity share capital, means she's having substantial interest in that organization. So whenever Mrs. X is having substantial interest in that organization, whatever income Mr. X is receiving from that company will be added to the Mrs. X total salary income. Whatever income is earned by Mr. X is added into the Mrs. X salary. Why? Because she is having substantial interest. She is having 20 means if you are having 20% of voting power, automatically it means you have an interest. We have some power in that organization. And she's having 22%. By her power, she has given job to Mr. X. Whatever Mr. X is receiving, nothing because of Mrs. X. So this total salary will be included to the Mrs. X, not the Mr. X. Now, find out the gross total income of Mr. X and Mrs. X for the assessment here. So just look at here. Salary received by Mr. X shall be added in the income of Mrs. X as she holds a minimum of 20% of equity shares in the company in which her husband is an employee, and also that Mr. X does not possess any qualification, he do not have any qualification and experience. But how come he's got job? Because of Mrs. X. So we will not give that salary, will not add to the Mr. X, but we will add to the Mrs. X total income. Capital gain, this all will be the Mr. X only, does not have any impact, and they have their own different. But if you look at here, here Mrs. X income is 2,24,000 and Mr. X is 1,05,000. See, but what they did, they have shown separately. Only Mr. X was able to pay the tax, but Mrs. X was only 9,000. But if you look at here, almost both have to pay some tax if based on their slab rates. Actually, they don't have here when we talk about slab rates. It's about 18, 19. So there it was different total scenario. So this is how we try to understand income from other sources. Next is set off of losses. Means if I'm doing any income, I have business, and if I'm getting any loss from that business, how to set off that loss or how to carry forward that loss. Set off or carry forward of losses. Just look at here under that first one is set off under the same head, set off against the income under the other heads. Means if I'm doing a business, whenever I get a profit, if I'm having two types of two business, one is garment based industry, the other business, some other business. So if I get a loss in the means it comes under same head. They both comes under the income from business only. They come under the income from business only. So if I get in one in business profit, the other business loss, in that case, can I set off or not? That is the set off under the same head. And the next one is, if I'm unable to set off because the two business also I'm unable to set off that loss, then can I set off against other incomes? Other incomes means I may get income from house property or I may get income from some profession or if I have income from salary, can I set off or not? That we will look after. So if the net result for any assessment is falling any loss, so in that case, you can set off such loss from any other source. Can set off against the income from any other source under the same head. But there are certain exceptions. Loss from speculation business cannot be set off against any other business or profession. That has to be set off only from the same speculation business only. I cannot set off from other business or profession. I got a loss of some speculation business, some trading business. If I get a loss, in that case, I have to set off that loss only from that speculation type of business only. I cannot go for some other business. And also long-term capital loss cannot be set off against short-term capital. I'm selling some plot or I'm selling some agriculture land or I'm selling some residential building or residential complex or any residential purpose property if I'm selling, which is a long-term asset. And if I got some loss out of that, I cannot set off against short-term capital. Short-term capital again means where shares or securities, whatever you sell, or any asset you are holding for less than 36 months, it comes under short-term. But if shares, it is 12 months. So if you got any loss in long-term capital asset while selling, that loss you cannot set off against short-term. You have to set off only against long-term capital gain only. Next, loss from the activity of owning and maintaining horse races. You're having some horse races club, and there you are maintaining them, and you got a loss. So you have to set off only against again when you get a gain from that business only. You cannot set off against other heads of same sources. Why? Because under income from other sources, we have n number of things like pension, we have interest on securities, we have crossword puzzles, car races, gambling, speculation. That all comes under the income from other sources. But I cannot write off that from the same all other things. I have to write off only from the same horse races business only. Have to whatever gain I get from that only have to write off. Next, loss from an exempted source of income cannot be set off against any taxable. Means we have some exempted incomes. Or if you just look at here, just now we discussed even interest on securities, which is an exempt. some there are securities exempted from tax. If you get any loss, you cannot set off it against any taxable income. Now we look after the set off against income of any other heads. So how do we set off that? Set off against incomes under any head. Set off against income under the other heads. So there are certain incomes. If you get a loss in that incomes, how to set off? Means from other heads. If you are after setting the same head, for example, interest on income from other sources is there. Under that we have different incomes. In that you got some loss. Still you try to write off. For example, I'll show it. We have like interest on securities. We got loss of 10,000. And we have family pension 2,000. So this is loss. 10,000 is a loss to us. Family pension is 2,000. So from under income from other sources, my income would be loss 8,000 only. Why? Because I have interest from securities 10,000 loss. Family pension is 2,000. So again my loss is 8,000. So now I have to write off this. How to write off this? I have to write off with other heads. Means still after writing off in the same head also, still I am getting a loss. So in that case, I have to go for the any other heads. Any other heads means I have income from salary, income from house property. So we have other heads. So, but these losses cannot be set off against other heads. Which losses? All other losses can be set off. But this not just now we have discussed above. There are certain exceptions. These losses can be set off only from that type of business only. Can be set off from that type of business only. Speculation loss should be set off only from speculation loss of business only. If we get any gain, only from that only you can do that. And if you have loss from activity of owning and maintaining race cars horse, that loss has to be write off from that type of gain only. Loss under the head capital gains or any loss is not allowed to be set off against winning from races, lotteries. That has to be write off only from that particular gain only. Until then, it should be carried forward. So this is carry forward and set off loss. The earlier one was set off of losses. How to set off that loss, and this is carry forward. It still it is there. How till how many years we can carry forward that loss? For how many years we can show in our accounts as it's a loss. Okay? So under that we have here 5 things, that is house property loss, business loss, speculation loss, and capital loss. Loss on account of owning and maintaining race horses. That's given. Okay, race horses. So here, if you are having any horse property loss, that loss can be set off for a period of 8 years. For a period of 8 years. And that will up to a limit of 2 lakhs for any asset. Here. If you have a loss in any business, it also can be write off up to a year of 8 years. And it can be set off against any other incomes under the head salaries. Speculation loss also can be set off till 4 years. So this all will come for theoretical part or some problematic also they may ask you for how many years to have an idea. Just look at you. compute income from the following information. Business profit for the year, business brought forward business loss. There is a loss also. There is a profit and there is a loss, and also capital loss on shares. It is a short-term capital gain loss. Loss on short-term capital asset. Shares. Shares is okay. Loss from self-occupied house. And would it make any difference if the brought forward business loss were rupees 25,000, including business loss of 2016 and 17? So if you just look at it, first we'll take the house property. So we have a loss of how much? 5,000. And do we have any profit? We have only one profit, the first one, that is here it is 20,000. So we have even business loss. So first what we will do, business now. First we'll write off the business loss. You can just look at it, 10,000. So same head. Our same head is profits and gains of business or profession. So first we'll try to write off that. So we deduct it. From whatever profit we have, we deduct the loss. And we get the profit of 10,000 and we get 5,000. Because income from house property is 5,000 and income from business and profession is 10,000. And here, capital loss on shares is a short-term capital asset. Yes. And shall be carried forward to the next step because it's not a capital gain in this. That's, you can just look at it. And because he asked one more point, would it make any difference if it is brought, if the brought forward business loss were 25,000? Why? Because just look at here. Loss here it is 10,000 he mentioned. Instead of 10,000, if it is 25,000, what will be the effect on our total income or taxable? Just look at here. Again, house property is 5,000. Business profit is 20,000. So business income available is 15. Balance income is 15,000. Why? Because the house property we have deducted. And but what is the business loss we brought forward? 25,000. But can we write off the 25,000? What is telling here? Including. Okay. So business loss 25,000 to the maximum of how much can we write off? We can write off only 15,000. But how much loss we have? We just look at it is 25,000. From 20,000, we have deducted the income from house property 5,000. So income available is 15,000 to us. From this 15,000, what is the loss we are having? We are having 25,000. But can I write off total 25,000? No, because amount available is only 15,000 to me. So 15,000 is the loss I will write off. And taxable income is nil. But still I have to write off some more loss now. Still 10,000 is pending. That will be carried forward to the next year. That will be carried forward to the next year. In the next year, we'll try to write off that loss. And this is about the aggregation and carry forward and set up of losses. Topic is computation of total income. So total income, we take all the 5 heads together and try to find out the total income. And deductions from the gross total income. So we have deductions that is 80A to 80B. Actually, we have deductions from 80C to 80U. 80C to 80U, and also called as Chapter 6 6A deductions. Deductions under chapter 6A we call it as. So we have 80C to 80A to 80B. And if you look at 88, is any duplication of deduction is prohibited. Means that individuals means 80G, GCA. And you can just look at here 80C. Normally, if you are anyone is employed, and almost I think you all are employed. And whenever you are receiving salary, when we file the income tax return and for deduction purpose, we take 80C where we get a deduction of 1,50,000, and it's an inclusion of both ATC, ATCCC, and ATCCB. And whatever the savings you may do, but you get only an exemption of till 1,50,000. And ATC includes all the savings or savings or investing the amount like LIC or any PF or national savings certificates or post office schemes or any central link or unit linked insurance plans if you are saving, children education, school fee, that all comes under the ATC, post office savings, ULIP, so all comes under ATC. And here gross qualify means maximum it will be 1,50,000 only. If it is less than that, whatever amount you are saving, that will be given. 80CCC means contribution to pension fund. If you are doing any pension savings, that also will come under this. 80CCD is contribution to pension scheme of central government employees. Means if you are CPS, you are having central pension scheme, that in that case, you will be receiving an extra 50,000 to the extent of 2 lakhs. For having CPS contribution, you will receive to the extent of 2 lakhs rupees. You can just look at it. Mr. Saxena furnishes the following particulars for the year ending 31st March 2019. They are having the investment of LIC premium 60,000, capital sum of the policy issued is rupees 2 lakhs, and contribution is 50,000. Tuition fee of the children, that is 3 sons, 10,000 each. Tuition fee for his daughter pursuing MBA in US is rupees 1 lakh. So, and house loan principal repayment is 30,000 to HDFC Bank. This property is under construction in Delhi. Principal repayment of housing loan taken from a friend is rupees 50,000. Property self-occupied situated in Delhi. Investment in national savings certificates 1 lakh. Compute the deduction eligible under section 80C. 80C limit is only 1,50,000. If you just look at here, in LIC is paying 60,000, PPF is 50,000, so you're almost 1,10,000. 10,000 for each son. 10,000 means 30,000. 1,40,000, and our daughter is also 1 lakh, so almost it is 3,40,000. But he will receive, see, you can just look at it. But he will receive only to the limit of 1 lakh only. Look at here, restitute to the extent of 20% of the policy. Here it is 2 lakhs is given. Premium paid is 60,000. And PPF is maximum amount is 1 lakh, but he is doing 50,000. Tuition fee is 2 children only, na, but he is having 3 sons. 3 sons and also 1 daughter. So 2 children, 20,000 only. House loan will not be allowed because still deduction it's under construction. It will not be taken. And contribution to NSC is there na here 1 lakh. So whatever the amount it is, total amount is 2,10,000, but is eligible for 2 lakh. But we cannot give them total 2 lakh. It is restricted only to 1 lakh only because it's only ATC. If he is doing some other like contribution in like any pension scheme or any CPS is having, then he'll get the remaining deduction. Similarly, you can look at here also investments in NSC 50,000, LIC premium paid 40,000, sum assured is 3 lakh. Deferred annuity plan, ICICI pension plan, contribution to pension scheme, of government equal to 10% of salary, housing loan, principal repayment, tuition fee repayment, 1 child only. So just look at here, NSC 50,000, whatever premium you pay, but from a sum assured, only 20% will not be taken. So it is 40,000. because 20% is 60,000 is paying 40,000. And deferred annuity plan is 30,000. And ICICI pension plan. And just look at here, housing loan principal repayment means he has taken loan. On that principal repayment also comes under 80 tuition payment for one children. Amount eligible is 1 lakh 80. So you get only an exemption of 1 lakh 50,000. And you can see 80cc pension plan 20,000. Deduction is 10,000. And central government pension scheme is 40,000. But whatever is doing, see here 1 lakh 50, got here 10,000 and it means 2 lakhs. But it has only exemption to the extent of 1 lakh 50 only. More than that, it will not be given. So these all discuss all deductions, 80C to 80U. 80D talks about medical insurance premium. 80DD maintenance and including medical treatment of an handicapped dependent. Medical treatment in specified diseases. So these are the diseases. 80 is repayment of loan taken for higher education. We see many of the people going to abroad for higher studies if they take any loan. Yes, that also comes under deduction. 80G donation to certain funds or institutions you're donating. Like if we have CM relief fund, PM relief fund, if you're paying anything to that, that is exempted under 80G. And see, these many are the funds. If you uh, do any donation to these funds, that all will be exempted from tax. Next, 80GGA donations for scientific research or rural development. And 80GGB contribution given by companies to political parties. Many companies are contributing to the political parties. I think you all know this very well. And 80GGC contribution given by any person to political parties. That all are contributions. Means we are giving, donating, or investing, or saving our amount. That till 80G. Next comes 80IA. Means where we are receiving for investment, like profits and gains from industrial undertakings or enterprises engaged in infrastructure development. If you are getting any profits from any industry undertaking, so that also where infrastructure development is required or engaged, like northeastern states. Okay. Next, 80IB, profits and gains from it. If you are receiving, that was paying or saving, this is you are receiving. Profits and gains from certain industrial undertakings other than infrastructure development undertakings. So the almost will be coming for theoretical or problematic problems in the exam. 80IC means profits and gains. We have started any industry in Himachal Pradesh, Uttaranchal, Sikkim, or any other northeastern states where there are not proper infrastructure or not available. For them, the deduction will be given for 10 years of period. We have started in this year for till 2034, there will be no tax. After 5 assessment years, 25%. Like that, the exemption is given. 80J, where you are collecting your business is about biodegradable waste like injection syringes, or you are working on biodegradable waste. In that case, you will be given an exemption. 80JAA, employment on new regular workmen. If you are business in that one employment. 80P, deduction in respect of income of cooperative societies, or 80QQB, royalties of authors. If you are writing any books, if you are receiving any royalty on that book. 80RRB, royalty on patents. Disabled deduction. 80U is for disabled persons. The deduction is given. So this is about the 8 deductions. Next, we move to the next one, assessment of Hindu undivided family. Assessment of Hindu undivided family. So till now we were discussing about the assessment of an individual. Assessment of individual, how, what are the different sources of individual receives an income that five heads, and how total income is clubbed together. If they're having some other incomes, how it will be added, and if it is clubbed with others income, what is the extent of amount that is clubbed with the other income. That all will be added, understood, and deductions, and how to calculate the gross total income. Now we'll try to understand the assessment of Hindu undivided family. Is the other is the other person, means when you discuss the definition of person, HF is also the person. So what is the assessment? How do we assess their income? You know, Hindu undivided family is the oldest form of business in India. And I think you may even know the Dayabaga and Vitakshara, how it has been formed. And their residential status of an Hindu undivided family is decided on the basis of Karta. And you know, co-partners means the other persons who are in that business, Hindu undivided family business. Co-partner means all the people by birth they will become the members of that business as per the joint family property, whatever the interest they have, like sons, grandsons, great grandsons of the joint family business or property will be considered. And HF, the Karta is the head of that business. He is the person who will carry that business. So all is theoretical part. Yeah, Karta is the person who look after the business, the head of that business. He is the person who takes the decision. School of Hindula, that is Dayabaga School of Hindula and Mitakshara School of Hindula. And Dayabaga prevails only in West Bengal and Assam. And other states, Mitakshara School is especially in West Bengal and Assam, it is followed. Dayabaga is applicable in West Bengal, state of West Bengal. And Mitakshara is applicable except West Bengal, in almost all the states it's applicable. And in Dayabaga, son has no right in the HF property. In Mitakshara, male child will have right by birth itself. In Dayabaga, share of a member in the HF is definite and ascertainable. It's not definable in Mitakshara. And in Dayabaga, on death of father, female members acquire equal right in HF property. Whereas Mitakshara, female members have no right to demand partition. In case of partition, the mother has equal right with as the top the son also. There are the different cases based on which the decisions have been given. If any individual who is the member of the Hindu undivided family and converts his separate property as the property of HUF or throws the property to common stock of the family or transfers his individual property, then that income will not be, it should be included only to the individual's income only. So only theory would just look at it. Mr. A owns a house property from which he derives a rental income of 3 lakhs per annum with effect from 1/4/2016. He converts the said property as a co-personal property of which he is a co-partner. Means he has included that in the business, HUF business. Discuss the tax liability of rental income. Although income shall be henceforth received by HUF, but it shall be deemed as individual income only, because his individual income only he has added into the HUF business. In that case, whatever income is earned by the HUF, though it is earned as shown as earned by the HUF, but it will be treated as the income of Mr. A only, and it shall be included when calculating. For example, if he is a member of HUF and is also a salaried person, in that case, while calculating his total income, this amount will be added. Residential status of an HUF. Same as like individual residential status, like resident but not resident, resident but ordinary resident, and non-resident, NRI. So here HUF is also considered as these three things, and to determine that these are the same conditions that are applicable for the how it were applicable for the individual, same they also applicable for the HUF. This is ROR, resident but ordinary resident. This is RNOR, resident but not ordinary resident. And this is NRI, non-resident of India. The residential status of individual, how it is treated as, similarly HUF is also treated in the same case. So here if when it is an HUF business, on it means it's a joint family business. When it's joint family business, on what basis it will be decided? As we know, Karta is the head of the family, head of the business, he is the person. So his residential status, either Karta residential status or manager of that family business, will be deciding whether it is a resident, ordinary resident, resident but not ordinary resident, or NRI. Based on that, we have two conditions. So, first we'll decide whether he is a resident or not. To decide that, we'll look after only one point, that is, whether the control or management of that business is situated in India or outside India. Control and management of business is situated in India or outside India. If it is situated in India, it is called resident. It is called resident. If they are situated outside India, it is non-resident. Okay, if it is partially situated in India and partially from outside India, then also it is resident only. Whether it is wholly or partially, control and management of affairs are done or situated in India, then it is called resident. Now, that is resident. Now, to decide if for example, they're controlled and managed outside India, then they are called NRI, non-resident of India. Then what is this ROR and RNOR means? Once it is decided resident, we want to know whether it is ordinary resident or not ordinary resident. To decide ordinary resident or not ordinary resident, these two conditions have to be kept. The first additional condition is Karta must have been resided in India at least 2 years out of 10 preceding previous years. And Karta has been present in India for a period of 730 days or more during 7 immediately or relevant preceding previous years. So here 2 years out of 10 years, relevant preceding previous years. Our previous year is 2022 and 23. 22 and 23. Assessment year is 23, 24. 23, 24. Now, what is our previous year? 22, 23. To decide whether it is a residential ordinary or not ordinary, I have to see that whether Karta was in India at least 2 years. 2 years means 7, 20 days. Yes. 730 days. 2 years he might have stayed in India. Out of how many years? 10 previous years means this is the immediate preceding previous. To this preceding is 2021, 20, for 21, 22. To that 2021. Like this 10 years you have to go back. Preceding previous relevant previous years. This is our relevant previous year. Preceding to that 10 years you have to go back. To the 1920, 1819. Like this 10 years if you look at all together, you might have stayed 2 years. 2 years days are enough. 2 years. So if it is satisfied, then and also these are it's not or, it is and conditions. He has satisfied both the conditions. The second condition is 730 days. 730 days out of seven relevant preceding previous year means to this previous year, 7 years. 1, 2, 3, like this, 7 years. In that 7 years, 730 days he might have stayed in India. Then he will be called as resident, ordinary resident. Resident, ordinary resident. Suppose he could able to satisfy only one additional condition. He was unable to satisfy the second additional condition. Then he will be called as resident but not ordinary resident. He will be called as resident but not ordinary resident. If we satisfy both conditions, then only will be called as he or she will be called, that is HUA will be considered as resident and ordinary resident. So that's what they will ask, like these questions will be asked. You can just look at here. The head office of ABC, a Hindu undivided family situated in UK. The family is managed by Mr. A. Mr. A was resident in India for 5 out of 10 preceding previous years and is present in India for 960 days during the last 7 previous years. Determine the residential status of the family. In the case given, there is no mention regarding the management and control. Yes, they did not mention from where the business is carried, whether is it in India or outside the India. Because based on that only, we will decide first whether it's a resident or not. But nothing is mentioned whether it is managed, controlled from India or from UK. So therefore, the family will be treated as non-resident. If the affairs of Hindu and okay, so we are treating it non-resident. Suppose if we assume that it is managed from India, then we go for this additional conditions. That is, on the other hand, if any part of the control or management is in India, then the family will be treated as resident. However, it would be ordinary resident in India if Karta satisfies the following two conditions. As the Karta in the above case is resident in India 5 out of 10 preceding. So we need only 2 years now. So he's satisfying this. Out of 10, 2 years, he is satisfying 5 years staying in India. And also what he is doing? And he was present for more than, because look at here, he stayed in India for 960 days. But we need only 730 days to satisfying both the conditions. So he's resident and ordinary resident. So there was no proper clarification. We can assume any of the thing and we may write a note and can be kept as. So same that only how it will be. Same deduction they do have ATC, AG, all the deductions. They are investing in that type of business. They'll get a deduction. Same computation of total income. Same they do income from house property. They have income from business and gain. Income from capital gain because they'll not have any income from salary. They do their own business. Motivated company. Income from other sources added. Deduct that ATC to ATU. Then we'll get the total. Any capital gain that will be done separate. Next we go for the assessment of firms and association of persons. So we discuss the next topic, that is assessment of firms and association of persons. So this is another type of other assessment, that was HUF, and this is firms, means partnership firm or AOPs, association of persons. This will be done. So meaning of partnership firm as per Partnership Act 1932, a person acting for all or all acting for one, working for one together, we call it a partnership firm. Types of partnership firm, we have partnership firm as such or association of persons, and minor is a partner. Hindu undivided family as partner it is acting, and scheme of taxation of firms. Here also the residential status, and just look at a partner in a firm on behalf of his firm. HUF, he has given a loan of rupees 1 lakh in his personal capacity. There is 16% to the firm. The HUF has also given capital contribution of 6 lakhs at the rate 18%. Discuss the applicability of section 40B. So 40B is nothing but reduction of interest whatever paid. Yes. So in the above example, the interest is 16,000 and the rate is 16%, because on 1 lakh 16%, and is paid is personal capacity, that have taken the 40B, because interest of rupees 1 lakh 8,000 is paid to X for the benefit of HUF. In this look at here, capital contribution of 6 lakhs at the rate of 18% it is given, and the excess of 12% shall be disallowed. In other words, out of total interest, 72,000 is allowed as deduction, and any remuneration paid to the partners. This look at here, on first 3 lakhs of book profits, or in case of loss, or 1,50,000 or 90% of the book profits, whichever is more. Means calculating the remuneration of the partners. So this is for this day, and remaining we continue to the next session. Okay.
Okay, ma'am. Thank you.
Yes.
Ma'am,
Yeah, ma.
can you tell me any important questions for the examination purpose, ma'am?
See, ma, mostly they may ask theoretical part. Okay. And problematic also. We'll discuss that. We have 2 more sessions. Okay.
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 Okay, ma'am. Thank
When you give me, ma'am? Hello, Bharti.
Yes,
When she will give her?
in the next class.
Okay.